This is just a quick little blog video for April 17th, 2015, just showing how our Forex signals are improving. This week I didn't spend much time adding new ones and fixing old ones, so this is pretty much most of the patterns here are older patterns. I'll just start with the euro dollar. And basically our whole method is we have about 26 different type of categories that we look for, and we mainly trade with the trend or at Fibonacci levels, support resistance levels. We analyze swings, use all the major and standard indicators plus all of our own statistical tools, which let us know when the market is super strong and worth buying a pullback, like this one that went up about 20, 30 pips, 15 pips, 10 or 12 pips. And one of the other methods that we pretty much focus on is finding markets that are kind of at rest, because when they break out they tend to explode and give you a lot of pips. Those tend to be lower winning percentage trades but also higher pip trades. For instance, this one, if the market gets into or you can clearly see it was trending up and then went sideways. When you have a lot of bars that go into a little tiny rectangle pattern, when they break out they tend to, as you can see in this instance, this was a 36.5 pip win. So this is the win. Typically the risk is much smaller, and you can see it's a 3.5 to 4 times bigger profit than what we risked later this day. And that's the case with almost all of our trades. We look and try to code up patterns that give us, even in this small trade right here, bigger wins than the risk. I'll just show a couple other charts and the stats for some of the days this week. This one only had one trade. It was in an uptrend and pulled back, and some of our indicators are showing that this down move is over and it's likely to reverse, and in this instance it did, and you can see it went up 10, 20, 30 or 35 pips. Small risk, bigger win. I tend to avoid trades where there's gaps because the market can do a lot of funny things. And if the market is going up but doesn't take out previous swing highs, I tend to avoid buying it. And in some instances like this, you can see we missed the trade here and here, but we also, in many instances, avoid a lot of unnecessary losses. Here's dollar Swiss. You can see from the previous day, there's some moves it misses, and then once the trend is identified, we have a very small loss or small win there, pretty much break even. Pretty decent win. This one got in a little bit early, almost got stopped out, and only made about 12 or 14 pips, but it's better than the loss. And here's some of the stats for the week. Keep in mind that I fix patterns, add some new ones each day, and then at the end of the day calculate the statistics for the day. So some of these are new ones I created this day. Some of the trades that were losers are not shown here because I fixed them. I keep stats of each individual pattern, and I tend to fix them over time if they don't make money. You can see this pattern here had 2 wins, 10.6 pips and 4.3 on the same day. So this on Friday at the end of the day, I think I added like 4 or 5 new patterns, fixed 2 or 3. It made 304 pips, 78% winning. And this is the key, much bigger wins than losses. This is one of the lower number of pips recently, 55% winning. Much bigger wins than losses, 194 pips. 309 pips, 61%. Huge day as far as the wins versus loss. Very, very tiny losses, 3.38 pips. Very nice. That's what I like. I don't, I'm happy if the wins are 15 to 20 pips and the losses are under 5. You can make money well under 50% if that's the case. And I believe this is Monday. Actually, it's probably Tuesday. Very, very good day. And again, much bigger wins than losses. So there's over 1,600 different patterns that are in here. And now I've realized, because there are quite a lot of trades that I would take that our systems miss. going through the charts, you can do a lot with them. You can draw trend lines off of multiple swings, or get it very close. That you could possibly get into this trade. If I was manually trading, I might buy this breakout with a very, very tight risk. And you can see this one just kind of took off. And once you're in a trade like this, if you're manually trading, you can move your stop up on every little pullback. And typically, at some point it's going to kind of run out of steam. So if you got into this trade, you might, draw your fibs on there. And I might have got out of half my trade here and probably get out of the rest here as it just chops around. A lot of times after it makes a big move like this, it's going to reverse, and I'm pretty quick to exit and be very happy with the profits. I try not to give stuff back. Much rather miss the next wave up than have a feeling that the market's done going up and it's going to reverse and hang on to the trade being greedy. So you can manually trade using a lot of our tools. I'm just going to quickly show some of my favorite, obviously the containment bands, but also the range projection. This will show you how far the market normally moves every hour, 4 hours, whatever time frame you want. A lot of times I use this in coming up with the patterns. If the market goes beyond how much it normally moves during a 4-hour period and does not pull back at all, I tend to want to buy breakouts. And only in that instance, if it went up and didn't quite even make a normal size or an average size move, and then went sideways, I wouldn't be buying the breakout, because it's very risky. But breakout buying and selling tends to be risky. And you can see, this move up here, it went above the 4-hour statistical high, pulled back right around the low. If you're manually trading, you can, when you see it make a decent move on the way up, you can kind of buy near a statistical low, and even though this trade didn't really take off, you would have made money on that and had a very small loss. If you're wrong, the win would have been bigger than the loss. And that's how you can use, the range projection tool. I'll try to showcase in each of these weekly blog videos methods of trading that you can do manually to find more trades. Here's an instance of a big move up. Not only did it go above the 4-hour statistical high, it went above the 1 standard deviation 4-hour high, and then it pulled back. And you can oftentimes on a pullback just kind of draw a trend line on it and buy when it breaks the trend line. You can see in this instance you'd have a very small risk, and the trailing stop made 1.5 times more than your risk. And by seeing the statistical levels, where there are containment bands, range projection, or many other things, one other tool I love and manually trade with, trend reversal. It will show you very high probability places to look for buys and sells. You can wait for one of these patterns and then look for an entry. Here's a good example of the pound dollar trending up above the 4-hour statistical high, the 1 standard deviation level, and you want to buy the pullback. This is when it becomes safer to look for buys. If you wanted to get into this trade, you might wait for a breakout, right, and get in. Goes up a little bit, you can move your stop up if you wanted to, or you get stopped out right here with a very tiny loss. Get back in again, goes up. The two trades, you have a small loss, much bigger win. It's a significantly easier way when you see a trend to kind of know when to start looking for buys. Here's an instance where if you wanted to buy again, and a lot of times this is for scalping purposes, it went up a little bit, kind of went sideways, wasn't able to make a higher high. You could always get out with a few pips here, in somewhere around 10. It did go up to 22, so you had many opportunities to make 2 to 5, maybe even 7 pips max in this, depending on how fast it's moving. But that's another method of helping you find a lot of trades. And over time, I'm going to be putting more and more patterns in that look for strength, then buy pullbacks, especially at and after these trend reversal patterns hit. It's a much better way of timing, and it's one of the many secrets that we use to know when to get in. I mean, you see a trend, it pulls back, it looks like it's going to go back up, and it doesn't. These can dramatically improve the timing of your trades, especially for trend trading. You can also use them to do counter trend trading. So the triangle patterns are usually when the end of the move hits. So here you have a high, it pulls back, comes back up, fails, pulls back again, it's not able to take the high out. If you drew a trend line on that, you might get short, and you have the chance here, as you can see, fell 25-30 pips there. So there's a lot of different ways. If you're taking 5 to 7 pip losses and making 15 to 25 and higher pips when you're right, you know, you can just be right, be wrong, be right, be wrong, be right, be wrong, and you're going to do well trading. Bigger wins and losses is a much more important thing to focus on than winning percentage, which is not important, as having much bigger wins and losses.